Hi, today is April 22nd, 2023, Saturday. I am Jason Shapiro with crowdedmarketreport.com. Today I was just going to kind of ramble about something that came up in an interview that I did this past week, where I was talking about that I was long the stock market, and my reasoning being that sort of everybody is bearish, and I made the comment of, and it makes sense to be bearish, and that's why people are bearish. And the interviewer was like, well, I don't understand. If it makes sense to be bearish, then why are you long? And then my answer was, because the market doesn't make sense, right? And that's sort of the idea behind the whole contrarian process and the whole contrarian idea. And just to get a little bit more into that, the market is a discounting mechanism. And what that means is that all sort of available information that people can come up with is already discounted in the price, whether that be fundamental information, whether that be technical information, whether it be whatever. It's in the price is what a discounting mechanism means. And I guess the easiest example to sort of get that point across is, let's say you had a football game and you had the best team playing the worst team. It's very easy to say, I'm going to bet the best team, okay? And there's a good probability that they are going to win. But you have a discounting mechanism in between there, which is the point spread, right? Which, again, takes into account everything that all of the bettors know, which is, A, this team is better, okay? And both fundamental stuff, hey, this is why they're better, the offensive line, offense, defense, whatever. And various technical stuff, this receiver has averaged this many yards against this type of defense, this running back has averaged this many yards, this team has scored this many points, they're playing a home game on grass, after an away game, after a Monday night, whatever. All this information gets discounted into the point spread, which is why it's hard to beat football. And the market's the same exact way. I would be willing to bet, without knowing the real data, that the favorite probably beats the point spread 50% of the time, over time, and the underdog, covers or doesn't, wins the bet another 50% of the time, which is why people don't win money over time betting football, except for the bookie who just takes the vig. And the market's the same way. And if that weren't the case, that 50-50 thing in football, then it would quickly adjust. Let's say the favorite covered the point spread 70% of the time. Well, very quickly, the point spreads for the favorites would start to go up, because people would find that and they would start betting the favorites, and the point spreads would adjust. And that's exactly what the market does, right? It adjusts quickly to new information. So the idea of, the market doesn't make sense. That's why, because it can just like picking who the better football team is, can be very easy for what the market's doing, what you think the market's going to do. And people have a tendency, obviously, to want it to make sense, because we want things to make sense, right? It's just human nature, right? We want things to make sense. Interest rates are going to go up. The Fed is fighting inflation. Okay, well, that's negative for the stock market. That makes sense. So if I believe that interest rates are going up and that the Fed is going to be fighting inflation, then I should be short the stock market. That's what makes sense, okay? But if everybody knows that already, then it's in the point spread, and that's why it doesn't make sense. And this whole idea really that gets people is this need that people have to be right. People love to be right, and that's just, again, human nature. I like to be right about whatever. You're having an argument with someone, you're having a discussion with someone, you want to be right. But, right can be a relative thing, first of all. What is right, what is wrong, and who determines what is right, what is wrong? When we start getting into things like religion and politics, well, let's take religion. Somebody who's Catholic, somebody who's Jewish, somebody who's Muslim, somebody who's an atheist. They can't all be right, but every one of them feels that they are 100% right. And what I have found as I've gotten older, it doesn't matter what data you show people, and it doesn't matter what science may say, and it doesn't matter what the proof is, they still will stick to their guns. I had a conversation with a friend the other day about politics, and he was like, I don't even bother arguing anymore, because not once in my life have I seen somebody change their mind. So what's the point of arguing? And I think that's true. You stick a Republican and a Democrat in a room, and have them argue, which you don't have anymore because Republicans don't talk to Democrats and Democrats don't talk to Republicans anymore. But if they did, would anybody change anybody's mind? I don't think so. I've never seen it happen, right? So this whole idea about being right and wrong, according to who, right? And what happens because of that is people stick to their guns, right? I'm right. I don't care about this. I don't care what he says. I don't care what they say. I'm right. I'm sticking to my guns. And then that follows through into sort of market thought. I'm right. The Fed's going to be raising rates, therefore the stock market's going to go down. I'm right. And they stick to their guns. And the problem with it in the market clearly is that you can lose a lot of money that way, being stubborn, because the market can do what it's going to do, and it's most likely going to do the opposite of what you think it's going to do. In particular, when you think it's going to do what most people think it's going to do. And that's the whole contrarian bent right there, right? So how do you make money? How do you get an edge then? If everything that you think is already in the market for the most part, how do you get an edge? You have to think differently. You have to have, and it's not a question of you have to be able to predict the future better than other people, because over time that's not going to happen, right? You can't predict the future. Nobody can. There's too many unknowns, right? But as I've talked about a million times, you have to figure out how to play the odds. So obviously, I've talked about this a million times. I don't need to get too into it, but the way that I do it, I look for people to over-discount a probability, which I measure through positioning. So if everybody's short something, then everybody, in my view, is over-discounting a possibility of something happening, and therefore the other side may not give a higher probability of working, but it will give a higher payout if and when it does work, right? So it's like saying, as I've said a million times, flip a coin. It's going to be heads or tails. But if I can get paid 60 cents when it's heads and lose 40 cents when it's tails, I want to do that over time. That's how I approach trading, and that's how I think trading has to be approached. Not this whole thing of I'm right, and not the whole thing of what makes sense fundamentally. Because you're not going to get an edge there. You're up against millions and billions of people. You're really not going to get an edge there. And just one real quick thing on the coin flip thing too. I flip a coin, I call heads, it lands heads. Was I right, or was it just a 50-50 probability that it was going to happen? The only right call to me on that, someone flips a coin, okay, what's it going to be? The only right answer is 50% chance heads, 50% tails. That's the only right answer mathematically, right? Just because you happen to say heads and it came up heads doesn't mean you are right. It means you had a 50% chance of getting it, and you did, okay? And I promise you, if you keep doing that, you're going to get it right very close to 50% of the time. And if you're paying a big, you're going to lose money on that bet over time as well. So it's all about finding trades that have higher payout if they're right than if they lose. That's the key. Do that how you want. I do it with positioning. You might do it a different way, but that is the key to this game. You have to get over this idea of I have to be right. You have to get over this idea that I can predict the future, and you have to get over this idea that the market is going to somehow make sense in your terms, because it doesn't, and that's going to lose you money. So I think these are important concepts to think about, and I think they're important concepts to get under your belt. And that's my thought for today. More than happy to hear any questions or comments, and we hope to see you on crowdedmarketreport.com. Thank you. Have a good week.